from Happy Trader. It is Friday, December 22nd. We're going to get into a Tesla swing trading long and short strategy, and you can see the overlays right here. We're actually going to toggle the strategy off, and you can see that we are going to be trading, taking trades on the uptrend signal, and then dumping them on the downtrend, and then taking a downtrend signal trade to the downside. The reason we're doing long and short on Tesla and why we're doing swing trading is because A, we don't want to be trading too often, and because Tesla is a very volatile stock, and that's the same reason for why we're taking both sides of the trade, right? So we're going to overlay our strategy. We're just going to put this down for a second, and you can see that our arrows here for the backtest are going to directly correlate with our signals. So we're going to go ahead and bring up the backtester. We're going to set a small account size here. Let's reset some of this stuff to default just to make sure it's clean and cleared out. And we're going to go ahead and set in 1,000. We'll do a 1,000 account dollar account size. Instead of contracts like we do with the futures, we're going to do percent of equity. So we're going to just throw that entire $1,000 right at the market. So we're going to set that to 100. For pyramiding, we are going to do no pyramiding, and that would mean if we get successive uptrend or downtrend signals in a row, right? So we don't want to add more, size in one direction when we know that Tesla is volatile, right? So we're just going to leave that as is, and we're going to go ahead and make sure our date range is set. Toggle this back from today, and let's generate a report for yesterday, and then we'll get the most recent report populated. And you can see that with the buy and hold equity, we are outperforming that fairly handily for 2023. And you can see the date range here. This is year to date with just a few days left in the year. And 41%, that's not too shabby. That's about, 4 times the average annual return of the S&P 500. Not too bad on 35 trades. We have a percent profitability of 37.14%. And you might be thinking, well, what's the deal, Ryan, with that? Like, win rate is everything. It has to be like 90%. It has to be 80%. Well, don't listen to the gurus that you've been watching on YouTube. You need to hit like and subscribe on this channel because I'm going to explain right now why win rate does not matter. And you can also see another video about why win rate does not matter. It depends on the strategy. So it's fully strategy dependent. Win rate is just going to be, derived from the size of your winners and your losers, right? So whether or not it's profitable as far as the, the P&L curve, as far as the expectancy, that's what matters. So yes, you can lose a lot of trades, but what if the size of those losers are not big? So let's look at that, right? So you can see that we go on some losing streaks. We do have more losers because we're only winning, approximately 1 out of 3 trades. But you can see that our winning trades here in white are much bigger than our losing trades. And that's where the win rate does not matter because we don't have to worry because we're making, the expectancies of the strategy are playing out, right? So this is a positive expectancy strategy. So that's where we get, look at that one right there, 406, and try to find a $406 loser, and you'd be hard pressed to do that, right? So that's really what we're kind of looking at is just bigger winners than losers, and that's where we come out with that. You can go to the performance summary, and you can see that the net profit is just the difference between the gross profit and gross loss. Using happytrader.io, and you can see buy and hold return. You can see, let's go to the strategy tester again. Let's go to the overview. You can see that there was a little bit, it kind of went in, kind of like zigzagged as far as the buy and hold curve. But look, the drawdown was very similar, and then Happy Trader was able to capitalize on those swing trades later in the year and really get above water. Now, one thing I want to mention is you might be a little like, what the heck? We're drawing down right off the beginning of the strategy. What's going on? Well, something you can do is, you can hedge, right? So hedging is something that I do. And what that entails essentially is backtesting a strategy or knowing a strategy is going to work, whatever that strategy might be. And if we start to go underwater, let's say we throw $1,000 at Tesla and then we start to go under, let's say to maybe $920 and we lost like $80 already, well, we might want to consider buying put options. So that's going to be a whole nother video. Make sure you hit like and subscribe. I'm going to show you how to hedge, and that's going to be something really important for your trading, and that's going to keep it so you're not drawing down, net, right? So this drawdown actually is not bad at all. You're only going from 1,000 down to 853. There's no free lunch on Wall Street. But what you can do is you can buy those puts against your stock position, hedge, and then you can just simply, once you get a confirmation that you're well above water on the core position, you can unwind the puts so that way you get rid of that drag to the downside, right? So you don't want your upside potential to get dragged down because you're paranoid about the next dip, right? Once your core position is above water, just wait for your core position to go back down, or that's what I do anyway. I'm not telling you or giving you financial advice, but that's what I do. And if it does go back down, I'll consider, maybe if we get back down around this area and do like a retouch, I'll put that put back on again, essentially, bringing the position delta neutral, which means that we are not long or short. We're just waiting for our initial thesis, our primary thesis, to become validated. Once it's validated, we take that put off. So that's going to be today's video. A very, easy way to trade happy trader signals. And again, we're just waiting for our signals, and the way you set those with happy trader is just add alert, and to get the uptrend and the downtrend signals, it's just the buy and sell signals right here. This does look a lot like some other indicators that are freely available, but make no mistake, these uptrend and downtrend signals are not what you can get on any other indicator on TradingView. This is a premium indicator. We've developed this from the ground up. It's actually taken 2 years to develop and backtest this indicator, and it works on all tickers, and it's going to easily go to any time frame and adapt. And that's why we chose TradingView to do this with, because if we were to use any other platform, it would just be inferior as far as the fit of these back tests and making sure that we're putting a product out there that is viable for the retail trading community to learn and to give trade ideas on how to better trade. So that is what it's all about, is teaching you how to trade. That's our mission here. We are here for the retail trader. So go ahead and, again, hit that like, subscribe. We are a startup out of Savannah, Georgia. We are a startup here on YouTube. So if you want more information on trading and hedging and options, selling options, all the stuff that everybody else makes seem, very confusing. And, once upon a time, I had to learn all this stuff from scratch, and you want it broken down for you in layman's terms, go ahead, hit like, hit subscribe. Again, my name is Ryan. I am the CEO and the head quantitative researcher here at Happy Trader. I am here to help you learn to trade smarter, and I wanted to wish you a Merry Christmas, a Happy New Year, and there will be some other videos, but if you don't see them and if they're not on your recommended, I want to make sure that you have a safe and very happy holiday. Good luck, stay safe, and happy trading. Have a great day.